Okay. Good morning and welcome to the Office of Tax Appeals. My name is Judge Teresa Stanley, and I have with me for this hearing Judge Andrew Wong and Judge Greg Turner. This hearing is for the appeal of SL Blue Garden Corporation. Today we have a stenographer, Ms. Alonzo, present and reporting the hearing verbatim. To ensure that we have an accurate record, we're going to ask each of you to speak one at a time, avoid speaking over one another, also speak clearly and loudly. When needed, Ms. Alonzo or any panel member may interrupt to ensure that we have an accurate transcription. After the hearing, Ms. Alonzo will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. Just a reminder that the Office of Tax Appeals is not a court, but is an independent appeals body which is staffed by subject matter experts. It is independent of CDTFA or any tax agency. While the Office of Tax Appeal is not a court, we must nevertheless follow certain guidelines to ensure we establish a proper record and have each party heard. Are there any questions before we go on the record? Seeing none, let's go on the record. So we're on the record in appeal of SL Blue Garden Corporation, OTA case number 231214934. The date is December 11th, 2024, and the time is approximately 10:57 a.m. This hearing is being held in Cerritos, California. Once again, I'm Judge Teresa Stanley. I will be the lead for purposes of conducting this hearing. However, my co-panelists, Judge Greg Turner and Judge Andrew Wong and I, are equal participants in deliberating and determining the outcome of this appeal. Okay, I'm going to ask the parties to identify themselves and who they represent, starting with appellant, please. And for CDTFA?
Sunny Paley, attorney with CDTFA.
Stephen Smith, attorney with CDTFA.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Thank you. As stated in the minutes and orders, the issue to be decided in this appeal is whether appellant is liable as a successor for unpaid sales and use tax liabilities of Eurosport Automotive, Inc. Mr. Fan, do you agree that this is the issue? Okay, when you speak, can I ask you to press the little microphone button so that we can hear it?
Yes.
Thank you. And Ms. Paley, do you agree that that's the issue before us today?
Yes, thank you.
Okay, appellant submitted exhibits 1 through 15. CDTFA did not object to admissibility of these exhibits, and therefore exhibits 1 through 15 are admitted into evidence. CDTFA submitted exhibits A through F. Appellant did not object to admissibility of those exhibits, and therefore exhibits A through F are admitted into evidence. Does either party have any issues to address with exhibits?
No, thank you.
Okay. Neither party has any questions or additional exhibit notes. Neither party intends to present witnesses to testify to facts in this case today, so nobody will be sworn in to testify under oath or affirmation. Mr. Fan, you requested 20 minutes for your presentation, so you may proceed when you're ready.
Okay, thank you. All right, Your Honor, members of the court, thank you so much for the opportunity to present our case today. My name is Brandon Fan, representing SL Blue Garden Corporation, a business that has been wrongly accused liable for the tax debt of his predecessor, Eurosports Automotives, in connection with their former body shop business, Upland Auto Body. Let's begin by outlining the relevant facts. In May 2017, SL Blue Garden purchased Upland Auto Body from Eurosports Automotives for a total of $480,000. As part of this transaction, the escrow company withheld $30,000 of the purchase price to cover potential tax liabilities. This is clearly indicated in the escrow closing instrument, Exhibit number 2. Additionally, a portion of the purchase price in the amount of $240,000 was also secured under a security agreement. That's in the Exhibit number 3, which provided SL Blue Garden the right to offset any losses arising from the seller's failure to disclose material facts. The tax liability in this case fits perfectly in the rim of the coverage of this agreement. So altogether, $240,000 plus the $30,000 withheld in escrow was more than enough to cover predecessor's tax liability at the time. However, unfortunately, SL Blue Garden made the final payments to Eurosports in May and July of 2018 in the total amount of $90,000 without knowing the predecessor's tax liability. It's worth mentioning that, in September 2017, after the purchase of the body shop business, SL Blue Garden filed a lawsuit against Eurosports, for intentionally misrepresentation and fraudulent concealment. A copy of the complaint is provided as Exhibit number 14. This lawsuit was settled in May of 2018, but notably, at no point during the proceeding did SL Blue Garden have knowledge of any outstanding tax liabilities. It wasn't part of the complaint at all throughout the entire process. If SL Blue Garden had been made aware of the tax debt at the time, it would not have ever, agreed or made the remaining payment of the $90,000 to Eurosports. So the fact is clear. SL Blue Garden was unaware of the tax liability of Eurosports during the ownership of the business. So what exactly happened? Let's take a look at the records. On May 16, 2017, the escrow company requested tax clearance from the department. However, instead of notifying SL Blue Garden directly, the department sent all notifications to the escrow company. Under Taxation Code Section 6812, the department is required to mail notice of tax liability directly to the buyer within 60 days. If it fails to do so, the buyer is released from any obligations to pay those liabilities. SL Blue Garden never received one single phone call, no email, no letters or mails during the entire ownership of the business regarding this matter. The department claims a notice was mailed to SL Blue Garden in May 2017. But the evidence shows that this notice is only a copy of the notice they sent to the escrow company. If we pay closer attention to the notice, I believe it's in the Exhibit number 7, the name and the address on the notice was escrow companies. They do have a wording at the bottom saying CC the buyer, but just by putting a CC buyer at the bottom, this notice won't get to SL Blue Garden. There are only two ways you can put in an envelope and mail your letter to the correct recipients. Number one, you use an envelope with an open address window, where if you have the correct address and name on top, when you fold it and put in the envelope, it'll show the correct recipient's address. But they only have the escrow's name and the address on the letter. So that won't work. So the second way to mail it is put in a regular envelope where there's no window, so you can see the address. For that, you have to have somebody manually type the envelope, put the letters in, and then mail it out. Okay. For that, they don't have a record of that. Okay. When our attorney contacted the department through phone call and the email, okay. Let me see here. Their staff response is, quote, I checked the I checked the account notes and did not find any instance in which the department communicated with SL Blue Garden in regards to the liability of the predecessor's balance prior to 2019. That's demonstrated in an email. I believe it's in the exhibit number 8 and number 9. Okay, and when our attorney requested a copy of any letter that were actually mailed to SL Blue Garden, or documentation of how those letters were sent, or a copy of the envelope, or the name of the person who handled it, they couldn't provide any of that. Okay. Additionally, the department claims that they communicated with the escrow company at the time, okay, and assuming that the escrow company communicated with SL Blue Garden regarding that. But as a matter of fact, we never communicated with the escrow company regarding the issue. And there is an email statement from the escrow company. It's included in the exhibit number 12, showing the truth. They basically saying they never, called us or contacted us regarding the matter. Okay. Again, as per Taxation Code Section 6812, the department failed to notify SL Blue Garden directly within 60 days window. Therefore, SL Blue Garden is released from any obligation regarding the predecessor's tax liabilities. Okay. Moving on, in May 2019, SL Blue Garden sold Upland Auto Body business. Okay. And it wasn't until September of 2019 that SL Blue Garden received a predecessor's liability notice. This notice was addressed directly to SL Blue Garden, so it had the correct name and address on top. Okay, as I mentioned previously, it'll work with, the envelope they sometimes use with the open window. So when you have the correct address, you put it in, it'll come to us. Okay, and if they don't use the open window envelope, they use the regular one. They do have this on record. Remember, they can't find any record on the previous notice, but this one, they have it on their logbook. They have a specific date and person's name to mail this notice to SL Blue Garden. Okay. So this further proves that when they do keep a good record for notice they actually send out, we received it. If they don't have a record, they didn't do it. Okay. Another interesting fact I'd like to bring up is that it's clear that the department is trying to impose tax liability on a business that no longer owns Upland Auto Body. They only decided and issued the successor liability after SL Blue Garden sold the business. So technically, SL Blue Garden is no longer a successor of the business. So my question is, is it fair or legal to retroactively impose a liability on a business that no longer holds the ownership? And moreover, it appears that the department has reached a settlement agreement with Eurosports Automotives and is collecting payments towards the balance of their debt. However, the department seeks to impose the entire $82,000 tax liability on SL Blue Garden throughout the entire process. Before we got to this court, during the lengthy back and forth appealing at the department level, they refused to provide any detail or status on the account. So it looks like the balance on the account is coming down quite a bit. And that's the information I got from this documentation they provided to this court. But still, they're trying to collect more. So I don't understand the point of doing that. So, Your Honor, it all comes down to three crucial points for the court to consider in this case. First, the department failed to mail the notice of the tax liability within 6 days window required by law. Second, the successor liability was only notified after SL Blue Garden had already sold the business. Third, the settlement has been reached with Eurosports Automotives, and the payments are being made towards the predecessor's debt. In our opinion, the department should continue to pursue the entity responsible for the debt, Eurosports, not SL Blue Garden, which had no knowledge of the tax liability during the ownership of the business, and was no longer the successor when the successor liability was issued. Attempting to collect from an honest business for the debt of another is not only unjust, but it also discourages responsible business practices. It is essential that the department holds correct party accountable and not penalize a business that has followed the law and acted in good faith. For all the above reasons, we respectfully ask that the court rule in favor of SL Blue Garden, as it is not liable for the predecessor's tax liability. Thank you, Your Honor.
Thank you, Mr. Fan. Judge Turner, do you have any questions for Mr. Fan?
Not at this time.
Judge Wong, do you have any questions?
Yeah, I just had one or two questions. Going back regarding the notice of amounts due and conditional release from May 2017 that was sent to the escrow company. Did SL Blue Garden ever receive a copy of that?
No.
No copy. Okay.
We received no copy during the entire ownership of the business regarding this matter.
Okay. That's all the questions I had at this time. Thank you.
And if I can add, all the notices they claim they mailed to SL Blue Garden, they all have the escrow's name and address on top. So like I said, it just can't go directly to us. Somebody has to handle it.
But did it go indirectly to you? Did you get a copy from
No.
anyone? Okay, not
No.
from the escrow company?
No.
Not from Eurosport Automotive?
No.
Okay, thanks.
Okay, thank you. I don't have questions at this time either, but I may come back to you after CDTFA's presentation. Ms. Paley, you can proceed when you're ready.
Thank you. Good morning. At issue for this hearing is whether appellant SL Blue Garden is liable as a successor for the unpaid sales and use tax liabilities of Eurosport Automotive, Inc. As we will discuss, appellant is personally liable for Eurosport's unpaid tax liabilities because appellant did not withhold a sufficient amount from the purchase price to cover Eurosport's liabilities, and appellant did not obtain a receipt or certificate stating that no taxes were due from Eurosport. Revenue and Taxation Code sections 6811 and 6812 provide that a successor or purchaser of a business shall withhold a sufficient amount of the purchase price to cover unpaid sales and use taxes, penalties, and interest owed by the former owner. If the purchaser fails to withhold, they become liable for the amount up to the extent of the purchase price, unless, 1, the former owner produces a receipt from the department showing the amount has been paid, or 2, the department issues a certificate stating that no amount is due. The purchaser or successor is liable for up to the purchase amount paid. With use of an escrow company, when clearances are sought timely and issued prior to closing a transaction or sale of a business, buyers are protected from incurring the seller's liabilities. According to Regulation 1702, the liability of the successor extends to amounts incurred in relation to the operation of the business by the predecessor, including the sale thereof, even though not yet determined against the predecessor, and includes taxes and applicable interest up to the date of payment of the taxes. The purchaser of the business will be released from the obligation to withhold as required if they obtain a tax certificate clearance from the department stating that no taxes, interest, or penalties are due from the predecessor. Regulation 1702, Subdivision C. The purchaser will also be released if the purchaser makes a written request to the department for a tax certificate clearance, and the department does not issue a clearance within 60 days. Revenue and Taxation Code Section 6812, Subdivisions B and C, and Regulation 1702, Subdivision C. In this case, in 2017, Eurosport sold its Upland, California auto body business to appellant. The bill of sale, located at Exhibit A1, shows that Eurosport sold its entire inventory of furniture, fixtures, and equipment to appellant for a purchase price of $480,000. As shown in Exhibit A3, the escrow company's closing instructions indicated $30,000 of the seller's proceeds to be held for EDD and tax liabilities. The escrow closing instructions, signed by both Eurosport and appellant, show that appellant was transferred possession of the business on May 12, 2017, Exhibit A3, page 1. After the transfer of the business occurred on May 16, 2017, the escrow company, Escrow World, Inc., filed a request for a tax clearance certificate with the department, Exhibit A4. Just 2 days later, on May 18th, the department promptly issued a notice of amounts due and conditional release for the full $480,000, Exhibits A5 and the 836 Exhibit B, letter D. Here, there is no dispute that appellant did not obtain from the department a tax certificate clearance for Eurosport, yet nevertheless purchased Eurosport's business, and did not withhold the amount from the purchase price for the payment of Eurosport's past due sales and use tax liabilities. Under such circumstances, Revenue and Taxation Code Section 6812, Subdivision A, renders appellant liable for the amount that was required to be withheld to satisfy Eurosport's unpaid tax liabilities, to the extent of appellant's purchase price. We note also that the department responded to the request for the tax clearance within 2 days, so the exclusion under Subdivision C of Revenue and Taxation Code Section 6812 for cases in which the department does not respond within 60 days does not apply. The initial notice of amounts due and conditional release issued by the department for the full purchase price was intended to preserve the department's ability to collect the full amount of taxes and interest owed by Eurosport. Shortly thereafter, to more accurately determine the amount of tax Eurosport owed, the department performed an audit of Eurosport, which was completed in October of 2017. The audit work papers are Exhibit F and the report of field audit, Exhibit D. Based on the audit findings, the department revised the conditional release, determining approximately $87,000 in tax, interest of $10,000, and a penalty of $877 was owed for the period of April 1st, 2014 through May 11th, 2017, ultimately settling on a liability of $93,000 in tax in June 2019. Exhibits A6 and the 836 Exhibit B, letters E, F, and G. Appellant has claimed that he was not notified of the liabilities. However, each of the notices of amounts due, or 1274s, indicate that they were sent to the escrow company, as well as the buyer and the seller at the business address. Again, the 836 Exhibit B, letters D through G. Before billing appellant as a successor, the department attempted to collect the taxes owed by Eurosport from Eurosport itself. In early May 2019, Eurosport had entered into a settlement agreement for its tax liabilities owed to the department, agreeing to make scheduled payments. By August of 2019, the predecessor Eurosport had failed to follow through on the payment plan agreement, and on September 23, 2019, the department issued a notice of successor liability to appellant for approximately $60,000 in tax, accrued interest of $21,000, and a penalty of $877. representing Eurosport's remaining unpaid sales and use tax liabilities for the period at that time, Exhibit C. To address directly the three questions raised by the panel at the pre-hearing conference, first, the panel asked us to address the $30,000 payment received from the escrow company. All payments received by the department prior to the issuance of the notice of successor liability, including the $30,000 from the original escrow received in July 2019, were applied to reduce Eurosport's outstanding tax liability. The notice of successor liability reflects the state of the account at that time and that the payment had been applied. Second, the panel asked the amount of the current remaining liability. As of today's hearing, the balance is $18,859.28 in tax, $27,276.18 in interest, totaling $46,135.46. Since there is no relationship between the successor and the predecessor, the department relieved the penalty incurred by Eurosport from appellant's liability pursuant to Regulation 1702.5, Subdivision D. The department always tries to collect from the predecessor before pursuing successor liability. As in this case, $37,000 was collected prior to issuing appellant's notice of successor liability on September 23, 2019, and any payments received are applied first to tax amounts due. Third, the panel asked whether a request for a certificate of clearance was received when appellant subsequently sold the business, and whether such a request affects appellant's potential liability. When appellant sold the business in May 2019, using the same escrow company, the department received a clearance request for that sale on May 19, 2019. The escrow closed 2 days later, on May 21, 2019. The department issued timely a 1274 for the full $555,000 sales price on June 28, 2019, and $70,000 was initially held by the escrow company. As discussed, predecessor Eurosport was making payments to settle their case at that time, but ultimately failed to fulfill their obligation, and the department issued the successor liability billing at issue here today in September 2019. The department issued a revised 1274 on March 19, 2021 for $52,588, reflecting the amount due at that time. To date, we have not received the balance of funds that were held by Escrow World. In conclusion, SL Blue Garden is liable as a successor, and there is no basis for relief under the law. Thank you.
Thank you. Judge Turner, do you have any questions for the department?
Yeah, so on the pursuit of the liability from Eurosport, you said there were payments that were made. Who was making those payments? Were they responsible persons, or was it a entity that was making the payments?
The $37,000 I referred to, $30,000 came from the initial escrow, and $7,000 came from Eurosport's representative. And then subsequently, there has been a payment plan in place, and likewise coming.
So the agreement for the payment plan, I want to understand who that's with. Is it an individual that happened to have a prior owner of the Eurosport entity, or is it some other entity that you had entered into the agreement with for payments?
1 second, please.
Yeah, no problem.
We don't know who's been making the payments on behalf of Eurosport, whether it's, we don't have the settlement agreement information.
But it was settled with somebody, I presume.
Yeah.
And we don't know who that person or entity is?
I can't say whether it's Eurosport, the corporate entity, or an officer
Well, since
who
we,
was
sorry.
with Eurosport.
ostensibly, that's the entity that he purchased, that the appellant purchased, right? That's what I'm trying to figure that out, who the.
He purchased the business assets of the
Got it,
predecessor
got it. Okay,
corporation.
got it. Okay. Sorry, the confusion. Thank you, that's my question.
Judge Wong, do you have any questions?
Just, yeah, one or two. So, appellant is making the argument that they never received a copy of the 1274. And I know there's copies of the 1274 with SL Blue Garden's address on it. Presumably they were carbon copied on it. Does the department have any sort of evidence that it was mailed aside from just a copy of the 1274? Is there some sort of log or something in the current evidentiary record that would suggest that it was mailed from CDTFA's end? A postmarked envelope, postmarked, something like that?
Only that you indicated as carbon copies are sent in the due course of business. We do not have certified mail certificate, but we do not send those for this. It's not our practice to do that.
Okay. Thanks. That's all the questions I had for now.
I have one follow-up question to the mailing issue. Does the department typically respond to the requester of the certificate and not necessarily to the company that is a purchaser or a seller?
I'm not certain I understand your question. So we received the request from Escrow World, the escrow company. We respond to them as well as to the seller and to the buyer.
Okay, and it's typical that you will, when an escrow company contacts you to request the certificate, they would be the primary recipient of the notice and response, correct?
Yes.
Okay. Just wanted to make that clear. I don't have any other questions, so we'll turn it back to you, Mr. Fan, and you can respond to.
Actually, got one more, if that's okay.
Okay, pause for a second.
Sorry.
Judge Turner has one more.
And I guess I want to follow up on this a little bit. I want to make sure I understand sequencing. Appellant purchased stock of goods from, we'll call them Eurosports, an entity. And that ostensibly because during that process did not withhold sufficient or obtain the certificate. However, that entity, Eurosport, that business, continues in operation? Or you're engaged. The record suggests that you've engaged in an ongoing effort to collect the liability from the organization, people, whatever it is that incurred it. I'm trying to understand how that's possible if the appellant had purchased all of their stock in business, which was the nature of what the statute's for. I'm trying to understand who that entity is and why they are not continuing to be the primary source of the satisfaction of the debt.
We are continuing to collect from them. I can't say whether we're collecting from responsible officers for the entity or the entity itself. I just don't know. I don't think we have that before us now.
So it is possible at least that there are successors, assuming the entity is no longer in existence, there are potential successor liabilities at issue as well, maybe.
I think we would call that responsible party.
Yeah, sorry, we're the one to apologize, yeah. Sorry.
Maybe I can help to clarify, Judge Turner. In the decision, it states that they sold their auto body shop. They didn't sell the entire business.
Yeah, thank you.
Okay, Mr. Fan, now you may proceed and respond to anything you've heard.
Okay, sorry about that. Couple things I want to respond to the department. Number one, they insist that we didn't hold enough fund to cover the liability. Again, we did $30,000 plus $240,000 under the security agreement, and that was enough to cover the total liability they ever incurred. It's just because we didn't get a notice, that's why we made the final payment in 2018, which is a year later. Okay. Number two, they keep claiming that they mail out the copy of the notice that they send out to the escrow company. Again, if we look at their logbook, they provided the logbook has evidence. It looks like they keep very detailed activity logs in that book under our account. And every single phone call, every single mail going out, they have a record, but they don't have record for the notices they send out. Instead, again, the successor liability they mailed out to us, they have a person's name, they have a date, they have it on record. So I just want to clarify that and to prove that when they do it, they have a record. If they don't, I highly doubt it. They actually did it. Also, to be honest, this, I'm first time here, so I don't really know the legal aspect of if the other party who is responsible is still making a payment. I just don't quite understand our role, especially we were no longer a successor when we received the successor liability. I guess that's up to the court to decide what's the indication of that. And that's all from us. Thank you.
Okay, Judge Turner, do you have any last questions?
No, thank you.
Judge Wong?
Yeah, just one last question for Mr. Fan. So based on the record, the evidence before us, it seems that you contacted CDTFA in May 2017 to update SL Blue Garden's mailing address. Is that correct?
I believe either the escort company called us and said we had the wrong address, or they probably received a phone call from the department. That's why, that's what I can remember. I could be wrong, but I for sure talked to them about the address.
Okay, and then you just let them know. And did you tell them to update it to an Upland address?
Yes.
Okay.
Yes.
Okay. Thank you. No further questions.
Okay, then this concludes our hearing. Thank you, everyone, for participating. The record is now closed. The judges will meet to deliberate and decide your case, and we will issue a written opinion within 100 days. So the appeal of SL Blue Garden Corp. is now concluded, and the hearing is adjourned. And enjoy the rest of your day.
Thank you very much.